YouTubers, Mike Martin's here, Mike Martin's channel, bringing you a very special edition of Australia housing disaster. Now, a lot of people don't understand what is happening in Australia. It's bedlam. I don't know if anyone uses that word anymore, bedlam, but it's really not looking good. And from sources on the ground, a lot of people are messaging me and telling me that this one right here. Workers in Sydney face 300-kilometer commute to find affordable housing. In the United States, that would be like from Detroit on I-75 heading south to like Cincinnati or more. More than Cincinnati. That'll be, I think, further down than Cincinnati. That's pretty far, okay? And I don't know. So let's hear what's going on in Australia. Australia's been in a housing disaster, and I've been saying the same thing over and over and over again, that they've been in a bull market for the last 100 years, and no one's got nothing to gain from this but the rich. And a lot of people are fear buying out, but Australia is very special because Australia's bull market started in 1979, and they've never experienced a real significant crash that really made a real significant difference. And that's what I've been seeing. Now, when I'm pulling up these articles from Australia, I'm getting a lot of mixed signals. I'm getting signals where all these people are at auctions, and auctions are off the hook, and bidding wars. Then I go back and I see other articles like this. Here's another sign that Australia's East Coast housing market is slowly slowing down. So you're getting a lot of mixed signals. I'm not sure who's working for who, because I'm not sure who these, I'm not sure who these companies are. These companies here that are these media companies. I'm not sure who they are out in Australia, but this is from Business Insider Australia. So let's see what it says here. Here's another sign that Australia's East Coast is slowing down. Australia's housing market is slowing down, especially in the once hot southeastern capitals. Prices are falling in nominal terms in many Australian cities. Auctions clearance rates are weakening, and growth in housing debt is slowing, particularly to investors. So this is a good sign if you're waiting on the sidelines. Here's further evidence that the market is slowing down. So remember, guys, like I said, okay, here we go. You can see it here in these graphs too. Perth going down. So is Hobart. Canberra is going down. So is Darwin. So this is from CoreLogic, okay? From CoreLogic, it shows that the average number of days it takes to sell a property across all of Australia, capital cities. So it depends on how many days on the market it is. So if you get a house 100, 200 days on the market, it's either overpriced or there's something wrong with it or the neighbor's a jerk. So, and then they use comparables in the area to determine what your house is worth. So if you're selling 20, 10, even 5% above a comparable within 2-kilometer radius of you, you have to really explain to the customer that's going to buy the house why you're 5 or 10% higher than a comparable within 2 kilometers. So you're going to see a lot of things happen in Australia in the next couple of months. I think after Q1, first quarter, you're going to see a huge problem after Q1. We're still in mid-February. Give it another 6 weeks. Wait for another week in April till the numbers get released, and you guys will see huge problems. So let's go here. In December, it took an average of 40 days for a property to sell in the capital cities, up from 37 days the year earlier. Up from 37 days. So it's going up. So things are slowly teetering in favor of the people waiting on the sidelines. While not significant increase, that masks some significant divergence in individual capital cities. In Sydney, Australia's largest and most expensive housing market, where prices are now going backwards, it took an average of 42 days to sell, up sharply from 34 days in December 2016. In February 2017, just before the APRA introduced tougher restrictions in interest-only lending. Remember the interest-only lending? That's death. Once you start having to pay down the principal, your payments go up $400 to $600 a month. Merry Christmas. Good luck with that. It is only taking an average of 29 days for the property to sell. Wow, not the same degree. The average Melbourne sale time also lengthened over the year, rising to 33 days from 29 days and 12 months earlier. In the line with the housing market indicators, the increase suggests that once a hot markets have cooled over the past year significantly in the case of Sydney. Across the smaller capitals, the results were mixed. In Perth and Darwin, where prices have been falling for some years following the crescendo of the mining investment boom, remember that? We've been talking about this for the last 3 years. The average sale time dropped sharply. Remember? The mining's in the pits. You get it? In the pits? Anyways, it's not funny anymore. Don't laugh. I don't blame you if you're not laughing. For Perth, it stood 53 days in December, down from 75 days in August, and 58 days a year earlier. It was a similar story for Darwin, where it dropped 88 days to 75 days over same period back in March. It was taking an average of 119 days for a property to sell in Australia's northernmost capital. Hobart, where prices are rising faster than any other capital city, the average sale dropped from 34 days to 33 days over the year. In Adelaide, also fell from 43 to 41 days. Like other mainland eastern capitals, average sales times in Brisbane and in Canberra rose, increasing to 53 days and 42 days respectively, up from 47 days and 39 days earlier. CoreLogic says that given recent trends in the prices, it is reasonable to expect that the number of days it takes to sell a property nationally will trend higher over the year, especially in southeastern capitals. So that's what's happening. Is a long article. Oh, let's see what this says here. Markets such as Perth, where housing values have been falling, are now showing a reduction in total advertised stock levels, as homes are starting to sell in fewer days, which would help dampen further value falls, it says. So other cities are doing well and other cities are not, and houses start sitting on the market longer and longer. So let's move on here. First-time home buyers are returning to Australia's housing market as investors retreat to the sidelines. Breathe a sigh of relief. There's the sidelines, guys. Those are the bench warmers. You got your bench warmers there. The Australian Bureau of Statistics, ABS, released housing finance figures for December today. And like most all other city housing market indicators recently, it was pretty weak. In seasonally adjusted terms, the total value of a home loan lending fell 1.6% to $32.88 billion, continuing the gradual downward trend seen over the past few months. Well, this is what we're seeing. Loans to owner-occupiers fell 1% to $21.07 billion, outpaced a larger 2.6% drop in investors, which fell $11.82 billion. So here's your housing loan approvals. See your investor here. He dipped a bit. When was that? January 2015. Spiked again. And he's dropping back down. And looks like Australian proper is catching up to it. Catching up to the investors. So it looks like they are coming to a retreat. This downward spike here at the end of this graph is indicating that the Australian proper is moving within range. These are the people refinancing, and this is the first home buyers, which are moving slightly, but not as high as the in billions. So you're probably right here would be probably 1.5 billion roughly, closer to 2 billion, I guess. Oh, you're just over 3 here. I'm sorry. I'm looking at the back of the graph. Up here, you're closer to 3. You're over 3. You're at 3 point something billion. So it's good to see first home-time buyers in the markets. But guys, I suggest some people wait on the sidelines because I think it's going to be a buyer frenzy after Q1. After March 2018, I think first week of April, you're going to see a huge change. Let's go. Lending to owner-occupiers is holding up well, said John Peters, senior economist at the Commonwealth Bank. While owner-occupied lending fell, it was 4.4% higher than a year ago. A key factor has been a pickup in first home buyers and loans in late 2017. This increased first home owners' loan to take up has been driven mainly by changes to first home buyer sweeteners introduced in July by the New South Wales Victorian state governments. In contrast, Peter said, the annual lending to investors fell 10.5%. That is huge! From a year earlier, driven by lower and tighter lending restrictions introduced by APRA last year. There was a clear loss of momentum in the lending to investors in late 2017, he said. This is because APRA restrictions in relation to the share of new interest-only loans and higher interest rates for investors vis-a-vis owner-occupiers. In response, we've been perceived by building finance stability risk and housing market. APRA introduced 30% limit on interest-only lending as proportion of total new housing finance in late March last year. So it looks like people are going back to the buying market and it's moving up. You see it right here? This roughly looks like it's just 2.5. Right now it's at 3.3 and that's in the billions, yeah. So in all fairness, I think things are going to change after Q1. If you're waiting on the sidelines for this long, might as well wait a bit longer to see what happens after Q1. I get a lot of people in Australia messaging me, Mike, when should I buy? Wait for Q1. First week of April, look at the numbers. You're going to see huge changes. I believe it's going to be the tilting. It's going to be the tsunami. It's bedlam. Tasmania's economic boom leads to housing shortage. Oh, again. Another city. Again. Tasmania's economic boom has led to housing crisis that has been... Oh, this is where, for people that don't know, this is where Tasmania is. See that? That's the bottom of Australia. Let me zoom into that. There it is here. So that's Hobart right there. That's booming right now. I think a lot of people left Melbourne to go further south to Tasmania. And that's why the housing market there is booming. The crisis that has homeless support services concerned. Hobart is now the lowest capital city rental vacancy rate at just 0.3%, when 7.30 visited the humble one-bedroom unit that was up for rent. More than 40 people were queuing it to inspect it. See, that's a supply problem. Real estate agent Cheryl Bennett said that she's never seen demand like this. This time last year, I only had 3 applications on this property. Today, we've had, I think, 41 people through. It's bedlam, she said. There's a lot of frustration, and look, I can see their point. It's very hard, especially for people just coming into the state who've never lived here before. The Real Estate Institute of Tasmania estimates that 5,000 houses are needed across Greater Hobart. We're actually seeing a dire shortages in terms of number of properties that are available for rent, the Institute President Tony Kalush said. The government has almost become a victim of its own success, and that it's created a tourism market that's booming. It's created and encouraged foreign students to come here for education purposes, and that's booming. And it's grown its economy and grown employment, and we've got people coming here to live. I just want a home. So young couples are moving in and settling down and doing their thing. So Tasmania right now, I think it was a former penal colony, to be honest with you. And it was mapped, and we're not going to argue this, it was mapped by the Portuguese in 1520. So we're not going to argue this because, oh, the Dutch, ooh. No, Portuguese have 300 years more influence around in Asia, Australia area than any other European. So let's move on. And look at this one. Workers in Sydney face a 300-kilometer commute to find affordable housing. If you're a fan of crisp country air and spending weekends wine tasting and local vineyards, the Australia's Hunter Valley doesn't sound like a bad place to invest in your first home. There's only one catch. Your daily commute to the job in Sydney's Central Business District will consist of a round trip of more than 300 kilometers per hour. So 150 there, 150 back. That's about 120 miles each way. It's a trip that takes around 2.5 hours one way. What? 2.5 hours one way. In your car, but 120 kilometers an hour your car goes, I think, on the highways there. and more than 3 hours at its fastest one-way public transport. It sounds like a tough slog, but for some people earning 57 large to 62,000 or less, Cessnock, a small town deep in the heart of Hunter, is the closest affordable town to Sydney. Look what people are going through just to own their own place, to live the dream. You know, these people are fighters. To travel 3 hours a day in hell in a parking lot. I'm telling you, when you're traveling in those highways, sometimes it's a parking lot. You're totally parked. The University of Sydney report found that in 10 years between 2006 and 2016, Sydney's lost close to 20% flow of key workers, including teachers, nurses, emergency service workers, and outer regional areas in the Leonora, Southern Highlands, and Hunter Valley. That's horrible. Why don't they move a tech company out there? Move some companies out there, because there's people there to work. Australia's key workers are increasingly locked out of their home ownership, particularly in the metropolitan housing markets of Sydney and Melbourne, and the report said. High house prices and rents are pushing out some of Sydney's key workers. The report reveals that between 2003 and 2016, the median price of established homes in Sydney more than doubled from 400 large to about 900 large, beyond the reach of many key workers, especially those who are single. Yeah, get out there and get married and have kids. Soaring rent have heightened in the crisis, making 20% home loan deposits out of reach for many. So this is what's happening, guys. This is a really huge, phenomenal problem because the infrastructure isn't properly being maintained by the people that know how to fix it. This is huge. You're seeing a massive brain drain in all these major cities. You're seeing a mass exodus of people in the big cities moving to Tasmania. And you know, like it's happening in London, like it's happening in Vancouver, like it's happening in Seattle, like it's happening in LA County, like it's happening in Dublin. Dublin is so bad that employers have to pay the first and last and security damage deposit on their new hires rent that are moving into the city because they can't even afford it. And yeah, I want to know what you guys think on this. And this is my report for Australia for this week. Australian housing disaster. Let's see where things head out to. Let's see where things head to. I'll keep you guys in the loop. Don't forget to join me every Wednesday, 7 p.m. LA County time. That'll be Thursday in Australia, like noon. Check your time, 7 p.m. LA County time. Don't forget to join me for Trends in the Housing Market. I'll have open lines this week, and we could discuss what's going on. Thanks for watching.